Up next, we have Mike Silagadze, who is the CEO and founder of EtherFi, and he'll be talking about how stablecoins can be used in banking today. Please welcome Mike to the stage.
The clicker is up there?
Yes.
Okay. Hello. Hi, everyone. Thanks for coming out on, I guess, the last day of Devconnect and one of the last talks. I'll try to make it entertaining. Maybe as a quick question, just to get a sense of familiarity, how many people have heard of EtherFi? Oh, nice. All right, good. And how many of you have actually used the product? Oh, that's great. Okay, cool. Well, that's awesome. For those of you that haven't, I'll talk about it very briefly, but mostly what I'm going to talk about is what banking looks like on stablecoin rails. Over the last, I guess, 7 or so years, this ecosystem called DeFi has evolved, and we've developed some pretty amazing protocols. Ways to borrow against your assets, ways to create all kinds of crazy derivatives. But what's happened over the last couple of years is DeFi has stalled a little bit, both in terms of deposits, in terms of TVL, and in terms of number of users. If you look at the number of active users overall, that number actually hasn't been increasing. And there's a number of reasons for that. I'm sure many of you, folks here probably use DeFi pretty regularly, but many of you have tried to get a friend or someone to use DeFi who's not a crypto native, and you probably have some idea of how that usually goes. So what I want to do is show you a fun little video of the current state of DeFi. So let's imagine that what you want to do is just earn some yield on your stablecoins. All right, all that work for 3% APY. I mean, I chose Kraken as the exchange and Rabby and Morpho. I mean, these are kind of random selections. I think if I had chosen Binance and Aave and MetaMask, it's pretty much the same kind of experience. So I wasn't trying to pick on any particular product, but again, I'm sure you've had the experience where you tell your friend, hey, you can get 15% on your stable coins. All you got to do is put your money into Aave and borrow some stables and loop it with Athena, and the reality is you're spending days doing tech support after that. So DeFi is completely incomprehensible to normal people, and this is the reason. I mean, this is still what you have to do. This is the reason why DeFi isn't growing, and it's stuck at this roughly 1 million users. And in fact, I think it's actually worse than this. The reality is, there's probably a few thousand users, not probably, there are a few thousand users that basically hold all of the assets in DeFi. So it's this very small, it's a microscopic space that has the potential to be a very large space. Whereas if you were to deposit into CeFi or TradFi, the experience is a lot simpler. You go to Kraken or whatever exchange, you deposit your money, you click 2 buttons and you're done, and you're earning 5.2% interest instead of 3.5 or whatever. So it's just easier. What people want is just a good product. Most people are not so ideological that they're willing to put up with extreme pain and like a very significant learning curve in order to get some extra yield. And frankly, that process that we went through, like, that's a very scary process. Like, at every stage, you can get scammed, you could like make a mistake, you could lose your money, you could send it to the wrong network. There's 10 different mines that you could hit that will cause you to lose money or get confused that you just don't have if you're using a TradFi product. So most people just want a good product. They're willing to make some sacrifices for self-custody, for control, but not to this degree. So what stablecoin banking, and this is still a loosely defined terms, I mean, we're still kind of building the space, but what stablecoin banking means is basically making DeFi accessible and productizing it for normal people. Stablecoin banking gives you the benefits of self-custody, of composability with DeFi, while still being really easy to use, giving you great yields, and not charging you tons and tons of fees. And today, there's a bit of a meta around this. Like, crypto neobanks are now a thing, and everyone seems to be launching one. Back in 2023, and believe it or not, we were pitching this. The EtherFi staking protocol was always, for us, step one in our pitch deck in 2023. We had this whole outline of a vertically integrated app and this vision of what we've kind of come to build. And no one really knew what we were talking about when we were pitching it, because it was just such an alien concept. The idea of actually building, products that were usable was, it just wasn't even part of the consciousness, honestly. And today, there's tons of players. There's tons of people that are building it, and that's great. And I think one of the powerful things about these stablecoin banks, these crypto neobanks, is that there's going to be a lot more of them, because the barrier to entry is a lot lower. So you can launch these things much more quickly, so you're going to see a lot more specialization and more variety, and that's great. I think ultimately that's going to be good for users, and that's what EtherFi is building. I mean, the simple pitch for EtherFi is retain custody of your stuff, so everything is fully self-custodial, controlled by your private key, however you want to control that, with 3% cash back and roughly 12% yield on stables. Like, that product alone, 10% yield on stables, 3% cash back, that's 1 billion people could be doing that. Like, that's already way better than anything else that TradFi has to offer. So what we need to do is package that in a way that's actually usable and and easy. And so for us, what that looks like is the suite of products in one integrated app that I guess some of you folks use, that has staking, which provides the base yield layer of the neobank, liquid, which is the investing portion of it, cash, which is the borrowing and spending portion of it, and soon to come EtherFi Trade, which allows you to make use of perps using your EtherFi portfolio. So let's take a step back and ask, okay, how do these things compare? Like, how does a crypto neobank compare to traditional banks? And so how do banks actually make money? Like, what products do they offer? How do they make money? Well, very loosely, what they do is you put money into a traditional bank. They go gamble with it on stuff. They give it out in loans. They put it into long-term mortgage bonds. Then if they lose the money, you pay for it, either in taxes, through a bailout, or just the institution goes bust. But if they don't lose the money, then they get to keep the profit. It's a pretty great business model. It's been around for thousands of years, and it probably will continue to be around. But more specifically, I guess, like, how do they actually make money? Well, there's basically three to four different business lines that are there for most banks. One is called net interest margin. So that's basically you put your money into a bank account. They pay you they basically don't pay you any interest on that, but they go and invest it and put it in T-bills and lend it out and do stuff with it, and they get to keep the profit. So if a bank makes 5 to 8% on their deposit base, they pay you nothing. They make a lot of money that way. This is like a very core metric that most banks track, is their net interest margin. How much do they get to keep versus what they pay you? The other business model is interchange and various bullshit fees that they charge. This is when you spend money with the bank, typically with like a credit card program that they run. The Visa charges the merchant about 3%. So the convenience store or whatever they're buying stuff at, they typically pay 3% on all the card purchases, which of course means they just raise their prices by 3%. So effectively, you're paying for it. The bank earns 1 to 1.5%, depending on the exact deal that they have structured. In addition, if you track it, you'll notice that they charge you very aggressive foreign exchange fees and all kinds of hidden fees for everything that don't seem like much individually, but actually add up to be pretty substantial. And this makes up another 20, 30% of their revenue, depending on the bank. And then most banks will have some sort of wealth management arm that basically you deposit your money into more speculative assets, into stocks, bonds, mutual funds, whatever, and they'll charge you either a management fee. In many cases, they'll just charge you an AUM fee if it's a managed account. Various brokerage fees. They might feed the order flow to a hedge fund, so they trade against you. And usually they'll make quite a bit of money on kickbacks from mutual funds and other managed products. So if a bank is recommending that you buy some specific mutual fund, they'll usually get a trailer on that for driving that investment. Now, how does this compare to a crypto neobank? And I'll use EtherFi as an example, because I think we're kind of pretty far along down that path. Well, EtherFi's protocol revenue actually breaks down roughly the same. So the biggest part of the chart, this part here, that's our staking revenue, and that's like the base yield. We charge a lot less than a bank does, by about an order of magnitude. We take a small share of staking rewards. We take 5% of staking rewards, so it's like 15 basis points, basically. And that makes up about 50, 60% of our revenue at any given time. The blue section there is our liquid vaults. Those go up and down, but basically that's the DeFi strategy vaults. So that's another 10, 20%. And then the growing part is EtherFi Cash, which is interchange revenue. It's mostly interchange revenue, and then a couple of other layers. So it actually looks very similar, but the difference is if we were a TradFi financial institution, we'd be charging a lot more. We'd probably be charging 5 times more from our customers, and therefore the product ultimately would be more extractive and worse. And so if you compare, for example, a more modern neobank like Revolut to EtherFi, what you find is, EtherFi just has far fewer employees as a ratio of how many assets EtherFi is responsible for, versus Revolut. The ratio is just a lot higher in DeFi. And what that means, again, it's just more efficient. It's a more efficient system. And our revenue is a lot lower relative to the amount of assets under management. And that's a good thing. That means actually this system is just much more efficient. If EtherFi was a TradFi institution, we'd probably have 500 or 600 employees. So that would be a much higher cost basis that we'd need to carry, which would then need to be passed through to users. So this is why, I mean, we can talk about all kinds of different things, but this is why DeFi, neobanks, DeFi banks are going to eventually dominate, because they are 10 times more efficient to operate. They're easier to launch, and that's why we see, I think Stanley was up here basically talking about, their version of it. We've seen a bunch of other folks launching as well. So there's just going to be a lot of these, and it's going to be great. It's going to be great for customers. Another thing I didn't mention is that these things also have global reach. So Revolut, because they take custody of user assets, they need a banking charter. They need licenses, much more heavy-duty licensing, in every region that they operate. Whereas EtherFi, we do require licensing. We have 4 compliance people full-time, so we do a lot of that stuff. But the burden is just a lot lower for us. And because we don't take control of user assets, that's the main reason. And so this is great. This is a huge win for the industry and for users. And this is a massive market to go after. If you look at, this is, the neobanking space, not banking, just neobanks, just Revolut and Chime and Nubank and others. This is now close to a $200 billion market. So that's about 100 times larger than all of DeFi. Which is this grand casino. There's a market that's hundreds of times larger out there available if you actually just build real stuff for users. So, and we've been doing that and have had a tremendous run, quite a bit of success over the last little while. Since we launched the full kind of neobanking suite, we've become the largest non-custodial DeFi bank player and continuing to grow really nicely. And again, if you've used the product, it's not very extractive. It doesn't charge you tons of fees. It has much lower fees than any TradFi institution, and rewards you a lot more, because it's just a fundamentally better system. So that's really the takeaway. Is if you build real stuff for people that actually use it, that market is 1,000 times larger than this giant casino that most of DeFi, unfortunately, is building towards. So that's my message. My takeaway is just go out there, build real stuff, focus on real problems. You will make a lot more money. You will build much bigger businesses than trying to do another casino with extra steps. Thank you.
Thank you, Mike. We have some questions from the audience as well. So I'll start with the first one, which is, do crypto neobanks operate under the same banking license as traditional banks? And if not, what regulatory framework applies to them? And why do they differ? Additionally, in the case of a platform like, I guess you mentioned this already a bit, but maybe if you could say some more.
Yeah, so they don't operate under the same licensing. They don't require a banking charter. I'm sure there's going to be a legal battle around this at some point. So it's not, the traditional banks aren't just going to quietly go away. But no, so EtherFi has a VASP license. It's called Virtual Asset Service Provider. We're working on a bunch of other licenses to be able to more vertically integrate. But it's a much lower bar. Again, the main thing is if you're not taking custody of user assets, meaning you can't steal people's money, then it's a much lower regulatory bar, and it also lets us operate globally.
Cool. On that globally, there's one question that's very simple, 2 words. When Africa? Question mark.
It's really hard. Certain markets are just really hard. So every country that we operate in, every country that we, in one way or another, can issue cards to or offer the liquid vaults or whatever, every single country we get a legal opinion. If there's a license required, we partner with someone that has that license. So, and we have, I don't know, maybe 50 countries that we operate in, that we have some way to offer services to. Yeah, Africa is really hard because there's, it's very easy to do stuff that gets you fined or in trouble or gets Visa to turn off your card program. India is also really hard, basically impossible today. Same thing with mainland China. So there's just certain regions that are really hard. I don't even see a light at the end of the tunnel, unfortunately.
That makes sense. Thank you. And then finally, what are the risks when using EtherFi?
There's tons of risks. I think objectively it's more risky than using a traditional bank right now, because this is still fairly new technology. So just, you have to be aware of that. I mean, the biggest risks are DeFi, I would say, especially if you're using the liquid vaults and you're borrowing against them. You're exposed to pretty solid protocols like Aave, like Uniswap. Like, these are blue chip protocols, but this is still DeFi, right? That's not, it's not the same level of risk as like buying a T-bill in your Chase account or whatever. So I would say that's probably the biggest risk.
And then a new question just came in. It says, are you looking to integrate with banking systems on deeper levels and even build some services for them?
I'm not sure what kind of services, I guess the question is asking, but yeah, what we want to do is build the last mile TradFi rails everywhere. So what that means is basically fiat on and off ramps everywhere with every major system in different jurisdictions. So for example, in Brazil, we recently turned on Pix. So people can fiat on and off ramp super easily with really low fees. It's the cheapest way to buy dollars, I think, in Brazil at this point. Here, we're going to integrate with Mercado Pago. In Canada, there's Interac. In the US, there's Zelle and PayPal and whatever. So all these things we're eventually we're working on plugging into.
Okay, well, thank you very much. Let's thank Mike one more time, please.